Welcome guys, good to have you back. Hope you guys are having a good trading week. So before we jump in, I want to frame what we're about to learn in this episode. This part of the model changes how you read a trading day, not with emotion but with clarity, because what we're about to cover will change how you look at each trading day from here on. So back in episode 2, we learned what liquidity really is. We saw how the algorithm creates it, hunts it, and delivers through it. And now that we understand the foundation, today we take it further. Today we connect liquidity to time, to the rhythm the algorithm follows every single trading day in Asia, London, and New York. And I'm telling you right now, guys, this is not a casual episode. There's going to be a lot of talking, a lot of structure, and of course, a lot of chart examples. Because everything we've learned so far only makes sense once you understand the role each session plays. Now, this is where traders either wake up or stay blind. So guys, don't skip, don't fast forward, don't treat this like some background noise. Because if you want to understand how the algorithm breathes, how it thinks, how it executes, you need to be here for every second of this. So settle in guys, get your notes ready, and give this your full undivided attention. Okay guys, so everything we're going to cover in this episode, the foundation is time. So there are specific windows where the algorithm becomes active, and those windows are the kill zones. Now please note this guys, all of these timings are in New York Eastern Standard Time, because that's the foundation ICT builds everything on. And keep this in mind guys, in this episode we are going to focus on the forex kill zones, but indices follow the same time-based narrative. Now, outside these windows, the market is preparing. Price builds ranges, forms liquidity, and sets up conditions for later. And inside the kill zones, the behavior changes. This is where liquidity is taken with purpose. This is where displacement appears. This is where the market starts to show intent. The Asia kill zone lays the groundwork, London challenges the liquidity around its range, and New York delivers the main move. Now, the behavior can change from day to day, but the timing doesn't. And once you understand these kill zones, the market stops feeling random. You start to see structure behind the moves and the purpose behind each session. So guys, in simple words, kill zones are the heartbeat of the market. Session tendencies and midnight open. Okay, before we break down each session, there's one important thing I want to clear up. Sessions don't repeat the same move every day. They follow tendencies. And by tendency, I just mean what the algorithm usually does, not what it has to do. The algorithm reacts to where liquidity is, not to what we're expecting. So some days the narrative is clean, other days it looks very different, and that's normal. Even when the delivery changes, the structure of the day doesn't. And that structure starts at midnight open, 12 a.m. New York time. That's when the day really begins, because that's when the algorithm kicks in. From there, price trades either above it, below it, or comes back to it. And once you start tracking how price behaves around that level, the day becomes much easier to read. But for now, guys, we are not using the midnight open for bias yet. And that's important, because first you need to understand how the sessions may behave or may not behave throughout the day. If you jump straight into bias without a context, you'll misread the entire day. So in this episode, we are only focusing on session behavior first. In the next episode, we'll use the midnight open to frame directional bias once the structure is clear. So for now, guys, just understand this. If you don't anchor your chart correctly, sessions will feel random. Once this clicks, the daily profile starts to make sense. Okay guys, Asia building liquidity. Right, before we move on, let me explain how we're going to do this. I was going to show chart examples after each session slide, but now instead, we'll look at all the examples together at the end. Because that way, you can clearly see how different days behaved, and you can see the differences without jumping back and forth. So for now, we are just building the framework, and once that's done, we'll study the charts together. Right, now let's talk about the Asian session. Now, Asia is where the day starts to form. It builds early range and begins building liquidity. And most of the time, Asia is pretty quiet, especially on USD pairs with limited follow through. But for pairs like AUD, NZD, and JPY behave differently because those markets are open. So price tends to be cleaner during the session. And if Asia is the only session that you can trade because of work or time differences, those pairs usually make more sense to focus on because Asia can offer tradable moves on those pairs. But its role in the day is still to set the foundation. This is where the structure for the rest of the day is built. Then London comes in later and reacts to that. So once you understand that and start to put everything together, Asia makes a lot more sense. Okay guys, now let's talk about London. Now, London is where the groundwork ends and the algorithm starts to show what it really wants to do. Asia forms the initial range and London steps in to test it. This is usually where you see the first meaningful rate of the day, a sweep of an Asian high or low, and then displacement that shows you which side the algorithm is interested in. And guys, please note this down. Sometimes when London takes the Asia high or low, it doesn't reverse at all. It just keeps driving. In those cases, the rate becomes expansion, and that comes from the higher time frame narrative. Now, London doesn't control the entire day, but it does shape a lot of it. It has the highest probability of forming the high or the low of the day. That's why you can't look at London on its own, guys. You need that high time frame narrative to make sense of what it's trying to do. Also, certain pairs behave really well in this window, like the euro dollar and the pound dollar tend to move really well here because the European markets are fully open and active. This is a session where the narrative really starts to reveal itself. You are watching how liquidity is taken, how price responds, and whether that displacement confirms the side the algorithm wants to deliver to. Right, New York, the truth of the day. Okay guys, so New York is a session that shows you what the market is really doing. Now, Asia set things up, London goes after liquidity, but New York is where direction becomes clear. Now, the New York Killzone from 7 AM to 10 AM is where dollar pairs really start to move with purpose. This is where you see whether the market wants to continue, push further, or completely unwind what London did. Meaning if London supports the direction, New York often follows through. If London pushes too far, New York can correct it. And if there's unfinished business left behind, New York usually deals with it, and sometimes that means price pulls back into an area where it traded before. After that, the tempo changes. From 10 AM to 12 PM, we move into what ICT refers to as the London close window. Now, guys, by this point, New York has already shown its hand. The London close reacts to what's already in motion. So sometimes price pulls back, sometimes the move continues, other times price reacts after going too far. So guys, in simple words, between 7 AM to 10 AM, New York reveals direction, and from 10 AM to 12 PM, the London close shows how the direction is handled. Okay guys, now that you understand the usual tendencies for each session, there's one more important thing that to keep in mind. The sessions won't behave the same way every day. It all depends on where liquidity is sitting, what still needs to be dealt with, and what the bigger picture is asking for. So some days you'll see the Asia flow, like Asia forms the range, London raids it, and New York delivers the move. Other days, London does most of the work and New York just manages what's left. And there are days where New York takes control and delivers the entire move on its own. So guys, the goal here isn't to memorize patterns, it's to understand the logic behind the move. Where is the liquidity? Which session is best positioned to go after it? And how does price react once that happens? So that's why the chart examples you're about to see are so important, because they will show you different type of days, different ways the sessions can play out, but they are all driven by the same core principles. All right guys, let's start with a quiet Asia. Now what you're looking at here is a 5-minute EURUSD chart. At first glance, price is just moving sideways, no big candles, no follow through, and that's normal for this session. And this isn't the market being confused, because on dollar pairs, Asia usually behaves like this. you can see price respecting the range. Highs have been created, and down over here, you can see equal lows. That's just liquidity building. There's no real displacement during the session, and the price isn't trying to go anywhere yet. And that tells you Asia isn't here to deliver the move. It's here to prepare the ground. Now, this range matters later, because later, London and New York will react to these highs and to these lows. They'll either take them, move away from them, or work around them. Now, this is where people go wrong. They expect Asia to do too much, especially on pairs like the euro dollar, the pound dollar, or the dollar CAD. But the key here is understanding what Asia is building: liquidity, balance, context. And once you see Asia this way, you stop forcing trades here, and you start waiting for the sessions that will bring the volatility. All right, now let's look at a very different kind of Asia. Now, this is a 2-minute USDJPY chart. Right away, you should notice this doesn't look like the euro dollar example. Price isn't stuck in a tight range. Asia is actually moving the price here. So as Asia opens, price pulls back into this 15-minute imbalance. From there, you get a clean displacement lower. Now, that matters because now price isn't just building structure. It's showing willingness to move lower. So after the displacement, we get retracement into the 2-minute order block. Price respects it and then pushes lower again. Now, this follow through is important. It tells you the move isn't finished yet. Right? Price wants to continue, and it does continue. Now, this kind of behavior shows up more often on yen pairs during Asia, because those markets are open, liquidity is active, and the session can express order flow instead of just preparing it. So this isn't Asia breaking the rules. It's the same session, the same timing, just a different asset. So same logic, different behavior, and that's why you can't treat every session the same, and you can't treat every pair the same. Right guys, now let's look at classic day with all 3 sessions marked. Now this is a 5-minute pound dollar chart. So Asia trades inside the range. London runs one side of the range. London then delivers price higher. New York steps in. New York continues in the same direction. That's the session flow on this day. Now, here's why this is called a classic day. On a classic day, the sessions divide the work cleanly. Asia builds the range. London rates at liquidity, sets the direction. New York steps in later and respects the direction and carries it forward. There's no conflict between sessions and there's no reset, because once London sets the move, New York just follows it. That's what makes this a classic profile. Simple, clean, and very common. Okay, now let's look at a session continuation day. This is a 5-minute euro dollar chart. So during Asia, price trades into a forward imbalance, moves away, and then stays in range. Before London, price comes back into the same forward imbalance and spends time there. And when London opens, price starts to move. London takes Asia highs and continues higher. And there's no reversal. Bullish order flow stays intact. Now, this move is supported by the higher time frame imbalance already in play. After that, pullbacks are small and corrective. Structure holds. And when New York opens, it doesn't change direction. It follows the move London started and continues into the London close. Now, this is a continuation day driven by a higher time frame objective. And guys, the key thing to understand is this: a London liquidity run does not always mean reversal. Sometimes it's used to carry the move forward in the direction of the higher time frame narrative. When you see price reacting from a higher time frame PD array before the session opens or right as the session begins, continuation becomes much more likely. Okay, now let's look at the day where New York does a delivery. This is a 5-minute chart with the session marked. So we start the day with a gap down, This is the new week opening gap, the distance between Friday's close and Sunday's open. When price opens away like this, the gap often becomes a draw on price. So during Asia, there's a bit of early movement, but price doesn't go anywhere. Asia forms a clear range and stays balanced. Later, London comes in and trades liquidity on both sides. Asia highs are taken, and then Asia lows are taken, but the direction is still unclear. In New York, price starts to accumulate, then New York opens, New York sweeps the London low, and this time the move follows through. Price rallies higher and starts working back into the gap. That's the objective of the day. London has clear liquidity, but New York is the session that completes the move. Now, guys, remember this, please. On days without a gap, the same model still applies. The difference is that price is being pulled toward a higher time frame draw instead of the gap. So the sessions don't change the narrative. They just play their role in it. Okay, now let's look at the day where the move comes later. Asia London stays in range, New York steps in, sweeps down in liquidity, and then starts delivering higher. That's what this day did. So on days like this, Asia and London don't commit to direction. They build range and liquidity, but nothing expands. Often these days line up with major red folder news like NFP and CPI. Volatility is held back on purpose. Price stays balanced while liquidity builds on both sides. Once New York steps in after the release, that's when the algorithm has permission to move. Liquidity built during Asia and London gets cleared, and New York delivers the real move. Now, guys, this is really important. Before you start your trading week, and again, before you start your trading day, you have to check the economic calendar and know what's coming. This is something every trader should be doing. It tells you when to be patient, when to be cautious, and when the market is more likely to move with intent. And you don't have to trade before a major red folder news. You wait for the release and see what the market gives you. And after the news, sometimes a clear narrative forms. Other times it doesn't. And if the market does not give you a clear direction, you simply step away. You don't force a trade. You don't try to make something happen. This is where discipline matters. Okay then, now let's look at the day where nothing really delivers. Price stays balanced throughout the day. There's activity, but there's no real expansion. This is what we call a no delivery day. On days like this, there's no higher time frame objective in play. Liquidity is present, but there's no pressure to move the price in one direction. So you may see short moves or brief pushes, but nothing goes far enough to define direction. And this kind of day can happen for a few reasons. Sometimes it's a USD bank holiday and the market is quieter. Other times there's simply not enough volatility. But either way, the outcome is the same. Price holds range. And guys, not every day is meant to trend. Sometimes the algorithm's job is simply to maintain balance. And on days like this, the correct decision is not to trade, because when there's nothing to deliver, forcing trades usually leads to mistakes. Okay guys, now you've seen different types of days. Here's the main point to remember. The market follows one continuous flow throughout the day. And remember, all the sessions we spoke about are all connected. Each session reacts to liquidity left behind by the previous one. And time tells you when something matters. Price shows you what the market is trying to do. And sometimes you'll see a session high or low taken before the Killzone starts. But that doesn't mean the session is finished, and it doesn't mean you missed the move. And this is why ICT always emphasizes time before price, because price can move at any time, but time helps you understand when that move has meaning. Now, guys, kill zones are not trade signals. They are time windows where the market is more likely to show direction. So even if liquidity is taken early, you wait for the kill zone to see how price behaves. Does it expand? Does it stall? Does it reverse or stay balanced? Now, what price does during the kill zone is what confirms the intent. So your job isn't to guess which session will move the market. Your job is to understand the higher time frame narrative and read how each session expresses the order flow. And this part takes work, guys. So you need to go back to your own charts and study how these sessions behaved. Look for the Asia ranges, look for the London liquidity runs, and look for the New York moves. And ask simple questions. Why did price move? What liquidity was available? And how it aligned with the higher time frame narrative. And when you study this on your own charts, that's when all of this understanding comes together and really clicks. Right, guys, that wraps up episode 3. I know this was a lot of information, but this is the foundation for everything that comes next. And once you understand how the sessions behave and how the day unfolds, the rest of the model becomes much easier to work with. So in the next episode, we build on this and talk about bias, how to frame direction using time, narrative, and higher time frame context. So guys, if you found value in this video, go ahead and like it. And if you haven't subscribed yet, please make sure you do so you don't miss the next lesson. And if you want a PDF for today's episode, it will be inside the Discord. The link is in the description. Thank you very much, guys. Thank you for being here. Have a good trading week, and I'll talk to you soon.